Hey, it's Aaron McDaniel here with Tomer Lankri. He's back. The broker with Lankri Agencies. Good to have you back, sir. Thanks for coming in.
Appreciate it.
Tomer's had some very great success with the interest rates dropping. The market was softening. Not really great for sellers, but really good opportunities for buyers, right? And so as interest rates continue to drop, tell us a little bit, give us a story or an update on what's going on.
So actually, first of all, Aaron, thank you very much for having me again. It's you guys are great here at 24 Hours Mindset. I mean, everybody can tell that there is something going on. The market is changing. The market is shifting. We all know for a long time that the Dallas market is incredible for investors. There's so many different group chats and forums and places that I'm involved with, and there's a flood of investors coming here.
Yep.
Mainly dealing with fix and flips. Some people trying to build their rental portfolios. Investors that do that, and you'll be surprised. I mean, I was personally witnessing two great transactions that happened here in the inner cities in Dallas. One of them was in Roulette. The other one was in Richardson.
Okay.
Both of them happened in the last 2 months, where I'm representing the buyer. Very good client of mine, an investor. Yeah, it was great negotiation, great tactics. We came almost at between 20 to 25% below list price.
Wow.
And it's a strategy.
Yeah, and you being a broker, having clients, negotiating for them, that's one of your superpowers, right? You're really good at it. I've seen it. And so good work on helping buyers find a lot of equity in those deals that are on the market today.
Yeah, and then, and this is where you come in along, because it's the loan products. It's really what's helping. The hard money loans, this is what helps us with those two deals and those two transactions where my clients came in only with 10% on the first deal, 15% on the second deal. He also got a draw. He got he got the construction funds on the side through the hard money. Homes that was listed for $400, for example, the one in Richardson. I'm not gonna name the address, but one that was in Richardson that listed for $420, and we got to it after about 100 and something days on the market, and we sent the first contract that I wrote down and drafted was for $300. And make long story short, we went through a cycle of inspection, the due diligence period, and then eventually we bought this property for $281,888.
Wow!
So less than $282, which is almost significant of 35% below list price. End of story. It's that the same client will move in, will demo the property, will renovate the whole thing, and then he's going to be ready when he finished to do the DSCR
and hold
you guys, pull all the down payment that he put, along with additional equity, because now we're going to have a new value with the new appraisal.
Absolutely.
Of course.
So that's the BRR method.
The BRR method, yeah.
Buy, renovate, and refinance.
Yeah, buy, renovate, refinance. Buy, renovate, rent, refinance, repeat.
That's right. That's right.
Yeah. You want to repeat that method, because eventually, at the end of the day, you're pulling equity out of the walls.
Right.
And it's just, right now, I think it's a great opportunity to go through those type of methods, buying in very low in good equities, that at the end of the day, eventually when you finish the project, you want to be at 70% after ARV. So you're going to have left 30% in the walls, 30% of equity. And honestly, I would just tell to all my clients right now, just rent it and wait.
Yeah, and we can actually on those hard monies, we can go up to 75% ARV. So there's a little bit of room if you find those deals. And like I said, your superpower is negotiating those deals, knowing the overall total plan and how to get there. Dealing with a broker that understands that is incredible. Anybody that wants to get in the real estate rental market and become wealthy by renting out real estate or owning real estate long term, having somebody to help guide them, coach them along the way, and understanding it is valuable. And so to those investors, we thank you. And it's nice to know that there's some brokers out there that can do that.
So, for example, I work with a lot of foreigners that come in here and open their LLCs. Are you guys here at Aspire going to be able to help foreigners that open LLCs to get those DSCR loans?
Yeah, so hard money loans, DSCR loans, like what we're looking for when we look at that is, one, is their U.S. credit. That's kind of important to see if there is U.S. credit. If there's an EIN
What if there's
number,
non-U.S. credit?
Yeah, so then we look at the EIN loans,
Okay.
employee identification number. We look to see how it's set up. There's alternative credit methods. I can't definitely give you a yes, but I can say it's worth having a conversation to see if we can, because if anybody can, we could probably figure out a way to get it done.
Got you. So you can still get those loans, and you don't have to have a credit score, pretty much.
Yeah, like there are ways around having credit scores to get those loans.
So you guys base your approvals based on the property.
Yes,
the
exactly.
value, the real value, and the rental.
That's
future
right.
rental value.
Those are the DSCR loans, and then hard monies. A little bit different, kind of the same scenario. It's as long as we're closing in an entity name, we can do those type of loans.
Oh, and what rates, like currently, like you guys can provide for
hard money or
hard money?
So hard money, you're going to be anywhere from between 10%, 12%. With the hard money loans are pretty cool because yes, the rates are high, but they're short-term loans. You're ultimately in these things for 12 months, 18 months. So you're in them short-term. You're doing interest only. For that time, so you're borrowing the money. We can actually lend up to $250,000 in renovations, and they don't have to put any money down for that. So you can literally get access to up to $250,000 in renovations.
That's incredible.
With no cash, as long as after renovation value is 75%. So as long as you have at least 25%.
25%.
Well, equity after the renovation, as long as there's
so you have to be at 75% after ARV.
After ARV, and you're good to go.
Yeah.
And so those interest rates can range anywhere from 10% to 12%. But again, interest only, short-term loans. And then once we refinance out of those, we've locked DSCR loans right now rates low 6s up to 7.5. Getting the lowest rate isn't always the best thing, right? We want to look at costs. We want to know what's your method, how long you plan on holding this property, what's your discount point. So we look at all that stuff to determine, is the lowest rate the best thing? Maybe it's not. Maybe lowest cost is the best thing and taking a little higher rate. If you're only going to own that property for 6 months, if you're going to buy it, rehab it, flip it, then there's no reason to spend a bunch of money to get a low rate.
Right.
And so we'll save you money up front.
You better save on the closing costs.
So save on the closing costs.
Yes, makes sense.
Interest rate at that point becomes a non-issue or a non-factor, really. It becomes irrelevant. Even when we look at, I do loans for people that are here for short-term contracts, let's say NFL players or anybody that comes to Dallas for a short-term stint, 2 years time frame. Well, we'll run a return on analysis calculator and say, well, if you're going to be here for 2 years, let's set up a loan based off of 2 years. Let's not get you the lowest interest rate and pay the cost and let the banks win. Let's make sure that we take advantage of the banks where we can.
Can you explain a little bit? I had a customer reach out to me, and we went through different type of loan products, and we kind of bump into two different terms that I would like to get like a little bit more of a great explanation from you guys here at Aspire, if you guys can take care of it. The bridge loan is one of them.
Okay.
And then there is another term in the loan products. It was very surprising as far as the terms. Like there is like no interest rate, and it's like transactional loan or something like that. I guess it's something that you get borrowed for 1 day, or is that something you're familiar with? Transactional product. Is that for something? It's like that maybe for.
No, I'm not familiar with that one. But the bridge loan stuff, if there's equity in a current property that they have and they're looking to borrow some of the equity to kind of get them into the new property, yes, we can help with that.
Okay. So they don't have to sell their property.
Well, we look at debt to income ratio stuff for those, but typically they're not required to sell their property. No.
So sellers don't have to sell their property. They can still get a loan based on their equity.
Existing in their
similar
current
to
home.
like eLook, but you just give them the money to move forward with the
That's
next
right.
one.
Yep.
Okay.
And so we absolutely.
But they still have to bring down payment for the next property.
Well, it can come out of the equity of the other property.
Really?
So, and then
so
what
it's a
happens
loan and an
is,
equity, so it's 100% financed.
Yep, exactly.
Wow,
well, they're getting financed from the equity that's sitting in their current property, and then we're using that for the new loan. Ultimately, when they sell the house, they would pay off that bridge.
That bridge. Interesting.
Yeah. So we can absolutely help with that. There's all kinds of unique, weird products. For example, I help somebody that.
Not a lot of the consumers actually familiar with those type of products. People, from whatever they see over the news or internet,
right.
They know there is conventional FHA, And our great veterans have their VA, which is but have come with entitlement and different protocols that it's really really hard with those loans in generally.
And there's other loans that if let's say you don't want to claim income, you don't want to put it on your tax return or your business return, and you can get me 12 months worth of bank statements. I can do a bank statement loan. We can create an income by looking at bank statements over 12 months and say, here's your income. Let's use this as your income that we're going to use.
There's any qualifications for that type of loan of stability of work? Like you have to work in the same industry for...
No, typically that's self-employed. What we want to see is, you need to have worked in the same industry for 2 years.
Okay.
If you move from a W-2 job that you're at for 5 years and now you're self-employed and you've been self-employed for at least 12 months, then I can do that loan. With those loans, though, typically we're looking at 10, 15, or 20% down.
Okay.
So as long as they have the money for down payment, they're not showing enough income, we have a way to help them get a loan for that.
Interesting.
Other things, let's say we've got clients with a bunch of money sitting in the bank. There's we can do what's called asset depletion loans. Maybe they don't make an income. Maybe they live off of whatever. Pensions or they Social Security, but they have
401ks.
But they have a nest egg, right?
Okay.
So we can do things to use that nest egg to help them qualify for a new loan.
Gotcha.
Let's talk about the older population, 62 and a half. We can create reverse for purchase. So we can do a reverse mortgage for their purchase, and that one's really cool. So if you have enough money to put down, let's call it 55, 60% of the home purchase price, you force enough equity that you never have to make another house payment. So instead of taking a big chunk of your money out of your assets and paying the whole house cash, you just take not only half, you never have another house payment, you create yourself a reverse mortgage, reverse for purchase. Great product for people looking to buy.
That's incredible. The broker of loans.
So we've got all kinds of products to support what you're out doing, negotiating really great prices. And remember the date the rate, marry.
Yeah. Buy the house, date the rate.
That's right. So
purchase the house, date the rate. Yeah, the rate you have to be dated because what do you think is going to happen? I mean, obviously for us as professionals in the industry, I'm speaking for myself, in my company and our brokerage. Our numbers today is not the same numbers that we had. You have to call the kid with his real name.
Right.
It's not the same market we had here in Dallas between the 2017 to 2022. It was 5 years of just, it was a chaos. It was booming all over the place, especially after post-COVID. Like people came here, bought properties left and right, paid way more than the values. And then since the end of 2022, we have a decrease in the market. It's all over the country, obviously. But what do you think? Where are we going in generally? I mean, you think, how is the bonds market in generally, which is pressing the mortgage index? How all of that look like?
Yeah, so, there's expectations that there's going to be additional rate cuts for the rest of the year, which will...
Do you think the Fed's really going to take it down?
Yeah, we think so. We hope so, right? It helps both of our businesses.
Yes, absolutely.
But it helps everybody. And but remember, the market is forward projecting. So the market is pricing some of that stuff in already. And so if you're waiting for that stuff to happen and it doesn't happen, then rates automatically spike up again. Because those projections of potential rate cuts have already priced into the market and they're already priced into the rates. And so what we saw with this most recent rate cut of 25 basis points that the Fed announced last week, initially it was flat. Some people
but the rates went up.
And then all of a sudden the rates started going up. Because they only cut 25 basis points. They didn't cut 50. That was kind of expected or priced into the forward-looking market. And so all that to say is if you're waiting for rates to drop, then it might not be a good thing for you, right? Like there's a projection.
That's why they rate them by the house.
There's currently a projection for rate cuts. So buy now, use the rates that are there because it's projected in. Don't wait till you're proven wrong and rates go back up.
I'll ask you questions from the conspiracy world that I'm very big fan of. Aaron, do you think that this country it's in deep recession and nobody talks about it? The media is not talking about it. What do you think? This is from the world of conspiracies, of course. Because based on all the indicators, we look like we are in a deep recession. And I have clients and friends here in Dallas that working in so many different industries, mainly the service industries, like locksmiths and air duct cleaners and construction companies and everybody. When I speak with people, I speak with business owners here in the DFW. At least here locally in our market, they're not that happy about what's going on. So I'm thinking if all those industries are suffering, what is really going on? Are they keeping us in the dark? Are we?
Yeah. So here's
are
what
we
I
not
would
getting
say.
all the truth?
Yeah, my thought on this is the value of the dollar has decreased, right? The dollar is worth less than it was, and it continues to be less. So when you look at what you can get for the same dollar, harder to make the dollar stretch. The good news about Dallas Fort Worth or Texas is it's a business friendly state,
Right.
And so as this national news and as things happen nationally, that to your point, make it harder for people to live and exist. Things will automatically, people will start moving to more business friendly states like Texas and Florida.
No income state, no income tax, on your
Yeah.
no tax on your income, obviously, and
I mean, if you
easier, cheaper to live here.
cheaper to live, but
Fuel is cheaper.
Right.
Energy state, producing energy.
And if you look at how many businesses over the past 3 years have moved to Texas, like
Big ones,
big names, big companies, and it's because we're friendly, we're friendly for businesses, and so being in a localized market and focusing on what you can do locally and how it impacts you, try to like get out of the noise nationally, because it really doesn't impact where we are and what we're doing as much as it could other places.
Right.
Yeah, I would say focus on the local what you see, what you're getting here to help curb some of that.
I'm biased for I'm biased for this city because I love this city. I live here for so many years. I grew. I have a family that I started here, and I love the industry here in generally. I love what I do. The passion is also helping me to go through the challenges, because people go through the challenges, especially when you're self-employed, and especially in this type of business of real estate, where we have like countless of hours that we have to put in.
Right.
There is no. I mean, we can work all the time, every day, and not without too much break. And I know that there is a very, very quality migration coming here all the time, and which support the business, support in generally. Business owners here and in generally the industry, even the 500 Fortune companies that come in here left and right. It's just insane. I'm raising those concerns because I'm getting those questions from my clients,
Absolutely,
and from my people. And sometimes, I'm never gonna be, you're never gonna find me choked or something. I'm always gonna have the answer, but I want to provide the right answers, and I want to provide true answers.
Yeah, and what I would say is
and sometimes I feel that like we kind of kept in the dark in regards to the
potentially
government.
we are, and potentially we are. But I would say the less that somebody stresses or worries about it, if they can focus on their world and their things, it's just going to make life easier. If you look at appreciation, for example, in our market, it's consistently increased. Now there has been a dip recently on appreciation. However, there was such a substantial increase. So if you look,
of course,
right. So if you look over a 5-year period, there's still appreciation in a house.
Absolutely.
And so it's kind of like the same thing that happens in the market, right? If you're gonna be in the market for long enough, you're gonna get appreciation.
Yeah.
In the Dallas Fort Worth area, in Texas, because it's a business friendly state. And more people are moving
I actually mentioned that in my first podcast series that's coming up. My first video that's going to be released to the public. Dallas jumped in appreciation of about 120% from 17 to 2022. So people that bought homes for 200, 250 sold them for double, or even more.
Right.
So yes, I think the correction that happening here in the market, I think it's good. It's good for this market.
It's bad
also for property taxes too.
It is, but it's bad for a few people, and those people, that they'll figure that out. But but I'd say the majority of people, it's been a good thing for the correction.
The correction is good. Yeah, overall. Yeah, I mean, you can tell that you can still find quality deals on MLS.
Absolutely.
And you can negotiate wonderfully 20, 25, 30, 35% under listing price, which is it's very surprising.
Yeah.
I'm not used to it.
Right.
But I love it. I love it. My clients love it, and I think it's a wonderful environment to be in right now, especially for those investors that want to build. For any investor, even for a young investor, even for someone just starting right now.
And I would tell you, with the market where it is today, the rates are slowly coming down. If you're on the fence, just get into it. Jump into it. Become a buyer. Work with a broker that can negotiate a deal for you, who can look at the market trends and analysis and say, okay, this has been sitting on the market for a while. Let's go get a deal 30%, 40% under list price. Not every agent is confident and can do it. So my recommendation, as rates continue to go lower, more and more people are going to flood into the market, which is going to cause home prices to increase, less negotiating power for the agents. So today is the day to buy. Don't sit on the fence. It will pass you by, and you're going to be looking back in 3 years and saying, man, if I would have just done this. So take advantage of it today.
It's a crucial time. Right now, it's like it's a window that probably I think it's going to stay for maybe until mid-2026.
Yeah,
we'll see it, or maybe summer of 2026.
If rates drop another 0.5%, then
everything is changing.
They're toast, right?
Yeah, of course.
So don't wait. Reach out to Tomer. Tomer, anything else you wanted to talk to anybody else about today?
Got a new YouTube channel.
Okay, great.
Let's subscribe. Tomer Unlock Dallas. We releasing market statistics, information, videos, lots of great stuff, and podcasts coming next week.
And you're helping the investor or the first time buyer or the second or third time buyer navigate the entire process from start to finish, right? And like if they want to be an investor, there's so many things you have to worry about and think about. And you've got an expert here willing to jump in.
I can deal with any type of residential transaction.
I love that.
Anything you want, under the radar, under the sky, under the sun, I can do it. Buying, selling, investing, condominiums, townhouses, lots, single families, of course.
Awesome.
Any price range, bring it on. Let's negotiate for you the best deal. I wanna congratulate Aaron for his great team and his support. Great lender, great broker. Supporting our company, and there is always answers. We went through actually a very challenging transaction that took us almost 3 months to close.
Longest transaction in our history, but we did it. And it closed, and we've got a happy client.
Yeah, we got an happy client that, by the way, still didn't move into the property.
He's working on it.
He's on the list back. He's on the list back, yeah. We had to negotiate that too. But great work, and thank you for having me. As always, it's a pleasure.
Thank you so much.
Thank you.